this is about analyzing flood insurance claim trends in the city. And we are using FEMA's NFIP data, National Flood Insurance Program data. Next slide. This is the kind of agenda today about speakers, a bit about the NFIP, the data sets and methods for this analysis, and then the final part, which I suspect folks are probably interested in, is this last section, analyzing claims and policy trends, understanding those trends by flood zone, event type, flood type, using one street flooding complaints to ground truth claims data, looking at both, and then mapping claims data. Okay, next slide, please. Okay, Tiffany, do you want to speak a little bit?
Hello, I am Tiffany Cousins. I'm a PhD student at Virginia Tech in the Urban Affairs and Planning Department. I worked as a GIS research analyst at the New York State Governor's Office of Storm Recovery, which is now called Wesleyan Homes and Communities as of 2022. Sorry. I currently work as a research and research social scientist using GIS in applied research and morphology, so measurement science, particularly using GIS-based data collection tools. And I'm passionate about GIS applied to disaster recovery, risk, and resilience.
And can you please tell them how we got connected at the event? This story's interesting.
Why we're both presenting today together is 2 years ago, I came here as he was presenting on floods, and my dissertation is on floods, creating flood maps from crowdsourced data when there's no other authoritative data. And so he was talking about 301, and I was like, oh, that's your data source. And so he says I was grilling him, or I was just asking questions. And so I was
questions at the
using trait. And so from since we kept meeting at other conferences. And then finally he's like, oh, why don't we present together? And I was like, yeah, that's a great idea. I had no ideas. So that's why I never asked. But then he asked. So here we are today.
So I recruited you for a bit long.
Yeah.
Yeah. So if everybody can read the slide, I am passionate about open source data sets, analyses, specifically about floods. I work with FEMA data, flood hazards data, street flooding data, flood net data. I'm just crazy about kind of finding insights about these data sets in this field, but also open source tutorials, reproducibility, getting this data in the hands of all of you to understand it yourselves. Okay. And I've worked with various data jobs, a data analyst, scientist, engineer. Currently, I work as a software developer, but I split my time between development and just data science work. Okay, next slide. So this slide has a lot of text, but I think what you should get from this, that the NFIP was established by the National Flood Insurance Act of 1968 and has two primary goals, is to offer flood insurance to properties with significant flood risk and to reduce flood risk through adoption of floodplain management standards. What you see here, it's not made to cover Hurricane Katrina. It's not designed to cover Sandy. These are the primary purposes. There's also mapping purposes, which is a bit outside of this presentation, but it's not just insurance. It's about mapping, communication, building codes, standards, etc. Next slide. We'll go through this quickly. And just to kind of reinforce the purpose of this program, it's to reduce flood losses through insurance and mitigation, adopt floodplain management standards provide access to flood insurance and to reduce federal expenditures on disaster assistance after floods. Again, it is not made for these extreme events, which I feel like folks kind of, they put too much pressure on this program, but it is not designed for catastrophic flood events, troubles, cyclone events, very, very big events, weather events. Next slides. Questions about that? And if I beat, that was a bit quick, but understanding about NFIP. So these are the data sets and methods we use in this. FEMA provides redacted claims data set, and it's on their open FEMA portal. So we utilized the redacted claim data set version 2, utilized OpenFuse API. I programmed in Python, but I know that you use R and GIS, and all of the work is on our current GitHub project right here. So it's NYC-ODW2085-NFIP. Reproducible workflows, it's all on GitHub. Make this analysis better. Like, take this code, work with it, find like your own insights, and like pass us, please. But I think the both of us are like very big in like open source, reproducible, getting this data like in the hands of like all of us. Questions about that? No questions today. Please. I could just talk like forever then. We could talk forever. Next slide, please. So yeah, this is the BetaNYC redacted claims. Redacted is the longitude is the 1 decimal point degree. So it's, I think in this area, it's about 6 miles. So to privacy concerns and so that you cannot trace individual buildings to like specific property members, owners, they have like redacted this data set. So you can find this linked on the open FEMA portal. This data set is still up there, but I know when we first started this, you were kind of precarious about like, will this data set be like taken down? And yeah, it was, like luckily it wasn't. Next slide, please. Okay, claims and policy trend. This is the fun part. Next slide, please. The first figure is in the blue, number of claims, and in the dotted orange is total paid amount. Second figure is excluding Sandy. If we were doing a like real-time series analysis, we would adjust some of these dollars. So these dollars over here, 1980s, 1985s, we would expect them to be higher. This was just an easy way, easy data like extraction, comparing claim versus amount paid. But if we were doing this in like academic setting, if we were comparing year over year, you would want to like adjust numbers. What do you think is happening in that first figure? First figure. On the left, left figure. What is this?
Sandy.
Okay. Sandy dominates this data set. It's almost you think we should drop Sandy? Right? Who says yes?
As an outlier?
Yeah. Who says no? Okay, no. Who says yes? Devil's advocate. I know, Charlie. What do you think? Oh, let's bring that Charlie. Drop into it's we usually we don't want to drop data. This is a like real event, and we should take into account Sandy. But because Sandy's there, we don't see all of the like smaller events. So the second panel, we've extracted that out, and now we can see Ida over here. We can see Ophelia. Why do you think Ida had a lot of claims, total paid amounts, but the like number of claims is not that high? Right? This event, it's nice. I think 2011 event, it follows like a nice curve. What about this one? Right? Question. I'm not sure. I'm asking you.
You can see the number of claim in the 80s are higher than if you compare the trend line to the value. But in the late 2020, the value is a lot higher at 20.
Yeah.
So it's probably the inflation. Well, no, that's my guess.
I'm not sure. But that is interesting. Why is this gap the way it is? That adjusted for inflation? No, it's not adjusted for this purpose. Which, again, we do want. If we were publishing this, you would want to do that.
Yeah.
Next slide, please. Think about these things. So this is a trend progression line for the average claim paid amount. Sandy's on that first panel, right? And then we've excluded Sandy here. This trend is going up, but again, it's not adjusted for inflation. So you could argue, well, these claims over here would be higher, right? It's reasonable. But it gives us something, right? It gives us some type of progression. Again, we're not forecasting past this, right? This is just a trend line within this data set, within this sample size. Okay, next slide, please. What do you think happened in that 2012 claims event? Obviously. Not obviously, but yes. Why do you think the policies in the blue follow the next year? Yep.
They redrew the flood maps and more people had to buy insurance.
Possibly. Melissa?
I mean, there's
Is the expert on this topic.
Oh, this one, not next. Because of Sandy, people that receive individual assistance claims then are required to be NFIP insured.
That's it, right. So I would suspect that they had to purchase insurance when they receive disaster funding and aid. FEMA would not give you aid and just keep on keeping on without insurance, right? You see in 2015, policy started going down, right? We don't like to see that. We don't like to see what's happening here, right? Then I think Hurricane Ida hit up, and then folks were required to purchase insurance, and also they had insurance before. So then you see, post Ida, you see this big jump in policies, right? There's this one big jump, and side up, and then Ophelia maybe. But yeah, interesting. But I think with this figure, the big event is that Sandy event where folks were forced to purchase insurance, and that this dip in the 2016 late switch is interesting.
Sorry.
Is this showing that there's 60,000 policies enforced in the whole city?
Yeah.
Why is that? I mean, does that make sense to you?
Kind of.
How many properties are in Ida?
There's about 860,000 parcels. So I guess it's a decent.
I think it checks out, but
To me, that makes sense. There's 2-ish million people here. I guess there's apartment building, but even those still had insurance as well. I live out in Roseville, so I know sure they should have insurance. We're not technically in the floodplain, but water knows what that is. So it makes sense that 6,000, and also think about New York City as a whole. At least 6,000 people. Technically, if you want to look at it that way, 60. Sorry, no, 60. Oh, yeah, that'd be cities. So yeah, I think it checks out. Well, and if you live in a floodplain and you have like a federally backed mortgage, you have to get insurance. But, as you said, water knows no boundaries. So it doesn't matter where you live, you're still eligible to purchase.
Yeah. But it was higher loss.
I would think that, especially with the people who probably had to apply to get the assistance, maybe that's where a lot of those, but as you see, pre 2020, not 2020, 2012, I'm so sorry. That big spike, it was only 40,000 before. Then Sandy came, you want that insurance, or we want that assistance, you have to get the insurance. So a lot of people was going to buy into that. They're like, Sandy flooded my house, I want that money. And then it tapers off and dips. But to me, it seems like the classic an event spiked people to act on something that they could have done as mitigation.
But I think it's fair. Like, is this access correct? Right? Like, that's like that's a fair question. That is from this data set. There could be condos. There could be like one building that has like multiple policies. There's like a lot of like nuance with like policies in force. So next slide, please. Okay. So this is a ratio of number of claims by policies in force. Hurricane Sandy in 2012, from this figure, it seems like 40% of those claims, 40% of those policies had claims against them, which like is like insane from like an insurance perspective. Are there any like insurance folks in the room? What's like the average year over year? I think it should be about like 1% or something. So if you have like policies, you like should never go above like I think I heard 3% on some like conference. But yeah, it can just show you 40% of those policies had claims against them during Sandy. Again, this is just with that population of the like policies in force. So it's not total like damages. It's not total buildings that were impacted from this storm. It's just claims over policies. So you see IDUP is about 3%. So it just goes to show you Sandy just like dominates this whole like analyses, right? If you get something away from this, if you want to get very significant losses, it's hurricanes, tropical cyclones, it's like winter storm events. Okay, next slide. So yeah, these are claims, counted claims by month and borough. You can see here, I guess, like as I just said, August, September, October, you can see a lot of claims, which I guess in the city, most of our like damages come from those winter events, storms. You can see Staten Island has probably spring events, pluvial events in every single like month. January, February, March, April, which is interesting. I would flag this as like something I would dig a bit deeper into. So the second panel is excluding Sandy because we want to keep Sandy in, but we also want to like look at some of the like values on the bottom. Observations about this panel? I'm doing like a lot of talking. What do you? Yeah.
Are those trends, one off? What period of time is this? Is this 10 years? Is it?
This is from, I think, 1980s or something like that. Claims wise. Policies, I think it's 09. But
I'd be curious with those spikes, how much are dominated by single events versus consistent January way?
yeah, we could use median, mean, but then you like kind of like lose some of there's there's events that just like dominate the sample. So it's hard. Median Like it'll just be events that kind of skew this data.
Yeah. On the left, which year that is?
Could be anything, any year. So it could be any. It's just like stacked on top of each other. Yeah. Oh, we see Sandy. Oh yeah, that's October. So we've removed that from this samples. Right, Staten Island has a lot of claims in every single month of the year. Right, that's interesting. Yeah. Question?
Just curious, and sorry, did you look at all at the value of the claims, like the dollar value, and like what's somebody's getting? Like the heterogeneity within, like, you know, I have a house and it has relatively minor damage versus my house is entire was flooded and I need to do, you know, $200,000.
I think that's on the second slide, but this is just counts of claims. Yeah, these are just counts. So yeah, there could be, we don't know what this sample is. We don't know how high, percent wise, ratio wise. It's just the number one. Claim. But it's still interesting. Why does Staten Island dominate fluvial spring events, April events? Yeah. When you can tell that a lot of the flooding, are these winter events, storms, hurricanes, Idas, etc. Okay, next slide, please. So then, yeah, these are our claims amounts. These claims amounts are not adjusted, which is not great, but you can see Sandy dominates the first panel. So it's very, very hard. We could use mean, we could use percentile. This event will just dominate your sample, right? We've extracted Sandy out. A lot of the powerful claims that cause severe damage are these fall events, tropical cyclones, hurricanes, Idas, Ophelias, Henris. This is where that damage comes. Group this one. Commons, right? What's this event right here? I want to ask about that event. Or these events, it goes up, down, right? Up, down, up, down. Why? Why is that?
In combination with the last slide,
Yeah.
seems like the amount of the claim is higher in Queens compared to, because you can see was 3 spikes in August,
Queens, yeah.
September, and December. The Queens actually surpassed the Staten Island, but the number of claims are higher from the last line. Seems like, yeah, it's the flood impact wider in Staten Island, but more significant in Queens.
Yeah. Again, I tried to use summary statistics, but we don't want to lose these events, and it's they're just events. So taking one out or averaging one, they're not uniform. It's hard. But yes, it's a good call.
All right, but these aren't values of the claims. These are just the number of claims that paid out.
Value. This is building
Oh, it is.
contents and increased cost of compliance. 3 things. Millions.
Okay.
Millions access. Sorry about that. No. Access. Have question?
I would be curious how, I don't know, not insurance, not housing, but
How the relative value of a home, it does. So there was
the more valuable homes in Long Island City that homes.
These are great questions, and it's great that folks are inspired for these questions and further things. Yes.
I'm sorry, but you said that again. I didn't hear you.
Oh, I was dying. I'm curious, and I don't know enough about how payout claims work. How policy. This is not here. It's just stop. But I'm interested in whether or not the home value plays in. So in other words, does your claim higher if your home is more valuable? You know, what is the market for evaluation of claim payout? How does that intersect with that property? Thank you.
But like as expected, we had a lot of winter events, storms, like fall events. I think a second analysis would be springtime, right? Springtime. Why is Staten Island, Queens? Where's Bronx, Brooklyn, Manhattan in here? I don't know. Why is it just these two?
Maybe we'll get to this later, but did you guys actually map where the claim that's coming?
Yeah, that's how many.
Yeah. Hard to answer why Staten Island without seeing like where Staten. Yeah, yeah.
Okay. So we're gonna talk about claim trends by flood zone, flood type, and then event type. Net effect circuits. So table of the events that were in the NFIP data set. So there's a lot that just have no event with it. I talk it up to, they just didn't document that. That's all. But these are the types of events that are in the NFIP data set. Next slide, please.
Can I just like comment?
Oh, go ahead, Harry.
These are not adjusted dollars. What would the adjusted dollars be for this 1992 storm, right? Like this is hot. That was several like years ago, like decades ago. What is this event, right? Why last year flooding, 500 claims, but everything else is different than this, right? But I think when I see this one, I mean, Sandy just like dominates this table, but this 1992 storm, if adjusted, will be higher than this one right here. What happens here? Sorry.
Next slide, please. Okay, is not good. So this is a graph of, again, the number of claims over time, but mapped with the either hurricane or tropical storm event on the graph. So as you can see here, in 85, there was Hurricane Gloria. Then in 99, there was Hurricane Floyd. Then we have in the 2011-2012 year-ish span, we have Sandy, Tropical Storm Irene. No, on hurricanes. Sandy, Irene, and Tropical Storm Lee. Then we get to 2021, 2024-ish time. We have Henri, Ida, and Debbie, right? To me, what stands out is you have these major events, a hurricane and tropical storm, but they're kind of spaced out, almost-ish 10 years in between them, if we want to think of it as like a 10-year return interval of major hurricanes and tropical storms. But like also then what's going on in between this time that we're still getting a decent amount of claims. Next slide, please. So this graph is, again, number of claims by flood zone and total building damage by flood zone. So these are in dollars. You cannot see the numbers. But total building damage in numbers. So going through when you see building damage, dollars, and it's just building damage. And so we have the high risk flood zone, low risk, moderate to low, no flood zone was identified, and the undetermined flood zone. So the number of claims, as you could expect and see, that a large number of claims are within the flood zone, right? Again, I did, in these graphs, I did not take out Sandy. I kept Sandy inside. So Sandy is gonna dominate this part. However, one thing besides the no flood zone identified, as in the data set, summarized by flood zone, it was blank. That's what the no flood zone identified gets in this graph. The next highest is the moderate to low risk flood zone, right? So you have the as expected in the high risk flood zone, so the 100-year floodplain, and then you have the moderate to low risk flood zone as the next highest to the 100-year floodplain. So kind of coinciding with New York State's hazard mitigation plan, they did a little study back in 2012 of a nor'easter in 2007 that a lot of the IA or individual assistance claims were outside of the mapped 100-year flood zone. So kind of correlates with that study as well. Also, building damage, again, is the second highest in that moderate to low risk flood zone. And moderate to low risk flood zone, we categorize as the X flood zone, whether it's shaded or not shaded. Next slide, please. Okay, and now we have total number of claims by flood type and building damage by flood type. The flood types are erosion, low velocity or ponding, mud flow, velocity flow, and I'm forgetting this one. Very sorry about that. I thought this was going to be a little bit clearer. Anyway, but the thing I want to highlight here is that the low velocity and ponding are the highest number of claims and damage. Now, the low velocity means not very high, it's just slowly moving. And the ponding, oh, thank you. Okay, yes, erosion, low velocity of ponding, mud flow, velocity flow, and wave action, right? So that's the highest is the low velocity ponding. Ponding defined as shallow floods. So think if you've ever walked, driven, or whatnot, and like there's a dip in the topography, like there's just ponding there. Or if it rains too hard on a Tuesday and it doesn't drain, right? That type of ponding, right? Which is very interesting to me as someone who likes to read about nuisance flooding. And that nuisance flooding is usually talked about in coastal environments. And yes, New York City is a coastal environment, but there's also inland flooding, as we saw at Idaho. Next slide, please. All right. And then this is, again, number of claims and building damage by flood event type. So from that chart at the beginning of this section, we looked at our chart of the events within the data set, a nor'easter, flooding, or whatnot. We categorized those as anything that had a hurricane, classified as hurricane. Anything that's tropical storm, we classified as tropical storm. And then everything else was a non-major event, right? So it rained too hard on Tuesday or Saturday. The July 9th flooding in 22, or the October flooding in like 2023, like those type of events in that non-major event, right? So as you can see, as we would expect, hurricane has the highest number of claims and damage type. However, what's interesting is the second highest are the non-major events. So the July 9th flooding, the October 2023 floodings, a nor'easter, right? That 2012 study was looking at that mapped IA claims outside of the floodplain was a nor'easter of 2007, right? So these non-major events do have some type of significance in within terms of claims and damage. Not as high as hurricanes, obviously. And again, Sandy is in here. I'm sure it would look a little bit smaller if we took Sandy out. But the thing I want to highlight is I'm noticing those non-major events are still significant enough. Next slide, please. Oh yeah, sorry.
You may not remember this, but like how many counts of events are going into the non-major versus tropical storm category? Like about roughly.
So yes, there are more non-major events in terms of like. Can you go back?
Oh, there it is. It is that.
So yep,
What tree you want?
the one with the chart of the events.
I have event one.
Keep going with this. Oh, this yes. So Hurricane Sandy, Ida, Irene, were all hurricane. Then the nor'easter, late September flooding, nor'easter, mid-spring storms, flooding, and non-major. And then it's not here, but tropical storms. What? So tropical storm. We other names of getty.
There's one about like how many where there just like a ton of more other flooding events, and then there's only a couple tropical storms.
Gotcha.
Like that, just ballpark, nothing like sack. So are we
Look at that for you. Yes.
that of boost of events as to recruit these, or are there others that are some?
So there's no tropical storms here, but there are tropical storms named out as Santa Monica.
It's okay.
I guess one thing that might be interesting to look at is like declared disaster versus non-declared. So like of these, Sandy, Ida had like a presidential declaration, and one of the things with like NFIP that, is important to know is, you can get coverage even if it's not a declared event. So I think what one of the things that you're highlighting is that there could be damage and you could get paid out even if it's not like these major like Sandy type of events. Is that
Yeah. So I did start with looking at the presidential declaration stuff. Part of my dissertation is looking specifically at fluvial flooding, which is not necessarily native fall during flooding. Sorry, which is not necessarily labeled out in the NFIP, but like I was surprised to see some things on here, but and may not have been presidential declarations. So yes,
well, speaks the importance of getting insurance, I guess.
yeah.
What is the financial structure of these payouts? So FEMA and the federal government is paying for damages, but then are people paying into it other than tax money? Like what is
They're paying into it. Yeah.
the flow of money? Like where it's it? Like who's insuring?
I'm sorry. I'm not an insurance person. I just like looking at floods.
You pay like insurance. Yeah, like owners pay like insurance. So like NFIP, like is not supposed to use like tax dollars, but for big events, the like burden is on the like taxpayer for like huge events. But for this NFIP, it's just like pay into it. It's just like coverage.
Yeah, because when it gets policy into it.
Yeah.
And that's hurting out.
And I think it was self like generating before Katrina. So like it was like I think FEMA was like above the red, and then 05 happened, and then Katrina, the losses were just too much. So financial structure there.
My understanding is the 1968 Act passed the NFIP because, and you can call it sounds like you would probably very well talk, but it sounds like the 1968 passed the NFIP because flood insurance is so catastrophic that no private insurer wants to take it. So it has to be federally backed spoke. It is mandated that you have to buy into the NFIP if you have a federally backed mortgage exists, or say, and you live in a floodplain. So that is where the pool claim comes from, pool policy.
Yeah.
But as you said, no one expected disasters as catastrophic as Sandy and as Katrina, which have, if not bankrupted the program effectively put it to the red. And so I don't know if it's a fully funded program now. If we start to take FEMA disaster money, I think FEMA's also struggling with funding from the last decade of disasters. But that's my understanding. Yeah, helps.
Is there data on like how much people pay into it? Like what if
Policies, yeah.
I mean, it's definitely subsidized.
But the like program is I think the point of this is like was not created for those big events. Like that's kind of like the like hard stop is this insurance program was not intended for Katrina, Sandy. So once 05 hit, it was really hard to like pay back some of the claims without like taxpayers' dollars. I think that's right. I don't want to say anything wrong. It's got to like keep going after this, but
One thing I do want to highlight, though, I think it's interesting is in the claims, and I understand it's a subset of a national data set.
Yeah.
However, in New York, Ida, according to FEMA, it's technically called the remnants of Hurricane Ida. So not really a hurricane. So next step, what I would do is recategorize Ida into a non-major event and see what that looks like as well.
But still got a declaration. It still causes a lot of damage.
let's keep going. Yeah. So everybody, 3101 street flooding complaints data. Who has used this data set before? Who loves it? Right? So this first figure is claims against complaints. Second is excluding Sandy. You see the first panel, Sandy hit. There's not that many but not that many 3101 street flooding observations because like it's a storm, right? Like you would not think there's like safety things in there. There's like health of like life. So you don't see the 311 street flooding complaints observations match up. You see Ida, Ophelia. What's going on here? Right? What's going on there? Experts? What is this point right there? Right? You love this data set so much. We see Sandy, we see Ida, Ophelia, Henri, et cetera, yesterday, like last year's storms. You see there's like a little pickup here. Then you also see these good, I think this is 2011 storm. Again, Ida, nice curves. Why are these claims low? All right, look at this point right there. All right, what does that mean?
Maybe it's a water main.
Possibly a break into like infrastructure. Yeah, but like all of these, maybe. Right, that's a good point. Maybe, but 1, 2, 3, 4, 5, 6, 7, 8. Right?
Maybe those people complaining don't have flood insurance.
Yeah. Yeah, if I like that one. Now we're talking. Yeah. But I guess I want you all to like, don't just accept these, right? Like, don't just accept like all of this. Ask why something looks the way it does, right? Can we compare claim versus complaints? Can both of those data sets ground truth each other, right? Can we use like, when there's a big event like Ida, can we like estimate complaints and can we estimate claims, right? But it does seem like there's like events being picked up, but this whole like duration from 2015 to Ida, it's kind of flat, right? Oh yeah.
Is that tend be that the complaints is people complain their own profit. But if you see a lot of blood on the street in the public place, people may call 311, but they wouldn't submit a claim.
Well, one will also remove duplicates from its data set. If you go and make a complaint, they will say, someone's already complained about this.
Yeah. And also 311 is like cover the entire city. But the FEMA insurance only covered that though.
You could still get all insurance outside, but
Oh, yeah.
so if your boss asked what's happening with these events, right? What if your boss asked? Yeah.
Another one, I go back to the chart that said the complaints were declining, right, from 2016 to 2020. And the New York City 311 data has improved throughout.
Yeah, that's true. This like
So
sample size is different.
Yeah, so it's getting unbalanced because claims are better. I mean, complaint here will last better than the claims.
Yeah, but you still could argue like these events, right? Like you could still, it's not, I mean, these are big, but like this one, these ones, this big curve over here. It's like, what's happening here? Right? Like, what is this like distance between this year from that year? Yeah.
And did you look at where those complaints are coming from? Because
home maybe it's coming from more apartment renters versus homeowners who have insurance, or maybe different counts. You know, you're thinking about KIPs versus SIPs, so policies enforced. Like now, many buildings, many claims for one building. That if there's only one building owner, then that's one claim submitted potentially versus 20 units where complaints before. Yeah. Whereas there's like people living in all those 20 units, and maybe their owner isn't addressing it through. So it could just be a renter's.
Yeah, it could be. It's like a data thing. But like still, why is this splat and what is this gap here? Right? Like what is this like jumped out at me? Right? Like what is this big curve?
And also a little bit of customer psychology. 311 is like free. So you can submit a complaint whenever you can, or it's like a small minor thing. But the claim, you have to go through the legal claim process. So you can, if you go back to the last slide, you can see the claim, the peak aligns with aligns pretty well, but the difference, or like the variance compared to the baseline is like not that high. So like Sandy's have a huge peak, but the complaints are relatively flat. Yeah, because like people know it's everyone's stock rate, so why bother reporting it again?
Yeah. Again, we ask questions in this field. We like observe, interrogate, but we confirm questions with data, right? Like we don't, oh gosh, what does this mean? We confirm like what's happening, or we like attempt to confirm, right? We can't confirm, but like if your boss asks, give me a data-driven deliverable about this sample, right? We confirm that, or we like attempt to confirm that data. Next slide.
All right. So the questions you'll be asking for next. Good. So we were talking about bounding of the NFP data. Next slide, please. Okay. So this is the sort of spatial distribution. I did a density. So number of claims per square mile in New York City. As you see, the dark, I also want to point out the next two maps are going to have a different classification. This is quantile, which think of it like ordering it in terms of largest or smallest to large. That's not what I want to say. The zip codes that would have the least amount of claims per square mile down. So it's like ranking the zip codes. Think of it that way. So Staten Island, Far Rockaway, and some of these coastal zip codes have the highest density of claims per square mile, which makes sense. It's on the coast. Coast is going to get hit with storms, right? Also, some of these areas may be low-lying. And I'm using the word maybe, but probably is low-lying. So more likely to flood. Next slide, please.
Was that Court?
quartile bins again? I forget.
Yeah, that was quantile.
Okay, quantile.
This one is natural breaks.
Natural.
The next one is going to be natural breaks as well, which is it's mapped how the natural highs and lows are within the data, just taking it how the data is situated, normal highs, is the natural highs and lows. So this is damage per square mile. Damage, again, total building damage in dollar signs, in dollars, right? So a lot of damage for the fourth category of damage is along the coast. Far Rockaway, a lot. Far Rockaway really isn't that wide. So to me, it makes sense. I drive along here, from over here-ish. But going to Brooklyn, my family's in Brooklyn. So I love taking the Flatbush Avenue Bridge when I want to go on long drives to think. As I take them out Yemen Bridge and go this way. So looking at Rockaway, that side, it's not that wide. And I'm saying that to say that it can get flooded from both sides, not just this side.
The bay in the ocean, yeah.
Yeah.
Yep.
And but from both sides, especially as you see here, this zip code in Brooklyn has high damage, and even this zip code in Manhattan. Next slide, please. Then I mapped the total set of street flooding complaints from 301 per square mile. Again, natural breaks. And what's fascinating here is you have some in that fourth category, fourth highest, in Staten Island along the coast, which makes sense. Far Rockaway, some here. This right here, this is JFK. This right here, there's a kind of like an inlet here. I shouldn't move this. Yeah, this is the border of Queens. This is Nassau County, right? So within here, there is a little inlet, not a misplayer bay, but if it's high tide, it will, natural tides can go up and down, but like high tide and you have it raining for long periods of time, it will overflow. If anybody lives in this area, it knows Brookerville Road. It's built through swampland, so naturally it's just gonna flood. There's police cars on both sides saying that you can't go through it. So it makes sense here as to why there's 3-1. But complaints, the third highest is kind of like those getting towards the inland, the coast, not necessarily the coast, but more inland. But you don't see a lot, you see a lot of this middle category, which is fascinating because it's like if we're complaining about street flooding, and then one, it's happening inland. Now it could be infrastructure problems, as in like just topography and drainage and such. But it's also like, is it though?
Okay, that's 52.
Yeah, go ahead.
It's like, what are you all? I think somebody said about water main breaks. How about these? Right? Like Manhattan, like in the center. Do you think they have flooding, street flooding? I don't know. All right, that seems high. What do y'all think? What happened there? Lincoln Center, I think that's like Chelsea. It could have been, I suspect that those aren't the water main breaks in that area. It could be, but this seems high. This seems high to me. Very high. I mean, like the same as, yeah. That seems high. Anyway, sorry.
Next slide. Excellent. Okay. So I thought it'd be nice to map claims by street flooding. So bivariate map, bivariate 2 variables, right? We have the number of claims, the darker the blue, the higher the number of the claims. And then we have this red, we're gonna go with tall red, the number of street flooding complaints. The darker the red, the higher the number of street flooding complaints, right? The density, sorry. So again, number of claims per square mile, number of street flooding complaints per square mile, right? So this grayish is low number of claims, low number of complaints, and this darkest red is high number of claims, highest number of claims, highest number of complaints. So we can see this red burgundy color along the coast. Again, makes sense, right? This is where it's going to get flooded a lot. We saw that in the claims and the damage data, right? But we have some middle ground inland as well. So you have medium number of complaints and medium number of claims inland. But you also do have some gray, so low at the upper Manhattan part, or Rocks part, sorry. And then next slide.
Damage,
Next, this one is the damages, density of damages versus density of street flooding complaints. Again, it's read the same way. We have some of high claims and high damages, high claims along the coast. Look at Staten Island. But also with Staten Island, you have high damage, but low complaints as well, which is interesting. And inland, you have high damage and some low complaints, but you also do have high complaints, medium damage. What can we reduce from that? People don't complain, that's what we want, that's what 301 is there for. But also, it's a bit more, what's the original one use? With the claims one, I don't want to use the word correlation, but it's there's a higher relationship between the claims and the street flooding complaints. And last one?
slide.
Nope.
This. I was watching you, Tiffany. Thank you for that, like analyses. And I think like you all for coming here, learning about insurance is awesome. This, I want folks to be excited about this data set, excited about flood risk, about climate risk, heat risk, and the way to kind of understand these things are about the data. I want to show just how passionate I am about this space, with all of you, and kind of inspire somebody to go above and beyond our analyses, because we need folks analyzing observations, questioning, confirming. It just starts with a single data set, and you find something about your own community, and then it's just questions. Please try to become inspired as I am about this data set as well. So thank you all.
Peace.